The SEC sued both Coinbase and Binance last week, which shook the crypto industry. I'm Rosemary Miller here with Stephen Ehrlich, the Director of Digital Assets for Forbes, here to tell us more. Steve, thank you so much for joining me today.
Thanks, Rosemary.
So, there were a few tokens mentioned in each of the lawsuits. How did those tokens perform over the weekend and earlier this week?
Right. So, I mean, there were a number of tokens. I think combined it was probably somewhere between 13 to 15 tokens mentioned in the lawsuits. Some of the most prominent ones in the industry today were included Polygon Matic, Cardano, Solana, Decentraland, and it goes on and on. And I know, at least speaking to a number of insiders in the industry, in some cases there was kind of no rhyme or reason why certain tokens were listed and some were not. I mean, for instance, SEC Chair Gary Gensler has kind of gone on record multiple times alleging or alluding to his belief that virtually every digital asset, with the exception of Bitcoin, is a security, and exchanges like Coinbase list a couple hundred tokens, Binance lists thousands. So, but regardless, I mean, those tokens that you mentioned, I mean, they fell in the high single digits through the end of last week. I mean, the suits came out on Monday and Tuesday respectively last week, but then there were some pretty significant drops over the weekend where they fell. Each one was a little bit different, but somewhere around the 20 to 25% range before recovering a little bit in the early part of this week. And then a couple of reasons for that. I mean, yes, it's just general negative market sentiment. Plus, I think just one of the unique features of the crypto markets, which is often held up as a plus, is that it's able to trade 24/7, 365, unlike the more traditional financial markets. And when that's the case, especially over the weekends where there's lower liquidity, some big sell orders can have a disproportionate impact on price. And I mean, there were some reports about major firms like Jump Trading sending millions of dollars worth of assets like Polygon Matic onto Binance. And when that happens, and there's again low liquidity, there's an inability to absorb big sell orders without sort of crashing the price. We kind of see that, and because of how correlated or how highly correlated the crypto markets are, especially during times of distress, prices can fall. In addition, we're starting to see some delistings from platforms that trade these tokens. I mean, Robinhood is a big one that is actually registered at the SEC as a broker dealer. I think they announced that they were going to drop Solana, Matic, and I believe Algorand was another one. eToro was another like brokerage that was dropping some tokens. And even though neither one of those platforms accounted for a large amount of the trading activity for any of these assets, Robinhood in particular is a well-known name. So retail traders will take certain signals from that. So for all those different reasons, we saw some pretty significant drops over the last couple of days.
And what about Bitcoin and Ethereum? How are they performing?
Right, and I'm glad you brought that up, because Bitcoin and Ether were certainly more buoyant than those other tokens. I mean, they're still negative for the last couple of days, but in the low single digits, and I think that just kind of speaks to a couple of points. I mean, for one, Bitcoin seems to be the one asset that is kind of universally accepted as not being a security, as a commodity. So it was no surprise that Bitcoin was not mentioned in either of the suits. Ether, however, it was a little bit interesting and surprising that it wasn't mentioned, because famously Gary Gensler, when he testified from the House Financial Services Committee back in April, had a pretty infamous back and forth with Patrick McHenry, a North Carolinian congressman who's the chair of the committee, where McHenry basically tried to press him for 5 minutes to answer whether or not Ether was a security, and he chose not to. But still. So there was an opening if the SEC wanted to put Ether into either of the suits, but it chose not to. So, I mean, there's a couple of potential reasons for this. I mean, certainly the SEC is not going to explain why or why not. Maybe its thinking changed and Ether's not a security, or perhaps it recognized the magnitude of bringing these two suits to the forefront and didn't necessarily want to muddle it with questions about whether or not Ether is or is not a security, because I would imagine, at least in the SEC's point of view, it's a little bit less cut and dry. It's also notable, too, that just today, in the midst of another major lawsuit brought by the SEC against Ripple, which alleged this lawsuit was brought actually in December 2020, They alleged that Ripple essentially ran a $1.3 billion unregistered securities offering when it sold a significant amount of a token called XRP as part of the, I guess, the discovery process in that legal proceeding. Just today, the SEC had to release a number of notes and emails surrounding a pretty now famous or infamous speech from a gentleman by the name of Bill Hinman, who was the former director of, I guess, the Division of Corporate Finance at the SEC, where he said that that Ether is not a security, all the way back, I believe, in 2019. So now the industry is going through those files and trying to figure out what's going on. It's important to note that just because perhaps one SEC under a different director, back then it was Jay Clayton, argued that Ether is not a security, that doesn't mean that Gary Gensler and his SEC has to agree with that or has to follow that precedent. But again, it does muddle things. So I think it is notable that Ether was not mentioned in the suit.
And Steve, just to switch gears a bit, I know you also spoke with Coinbase's chief legal officer, Paul Grewal. What were the key takeaways from that conversation?
Right. So I was really excited to have the conversation with Paul. I mean, certainly Coinbase is leaning into this fight. They are excited, I think, in some ways, to have their day in court and to not necessarily, as they say it, make their case in front of at least one regulator that doesn't necessarily see eye with them, and would rather make their case in front of an impartial jury, a judge that's sort of equipped to handle issues like this and get some answers to, I think, what a lot of people in the industry see as legitimate differences on the applicability of law. But regardless, I mean, Coinbase is gearing up for the fight. They want to have their day in court, and in particular, we had a chance to drill down on some of some commentary that Gary Gensler actually made last Thursday at a financial conference when a couple of days after the suit came out, about how there are rules about how there are exemptions for registering as securities and securities exchanges, and he kind of just pushed back again and talked about how crypto is an entirely different animal, and that there is not much that the general setup right now is not acceptable. But what got Paul really excited was a piece of financial legislation that came out of two committees by House Republicans last Friday, House Ag Committee, House Financial Services Committee, that for the first time would actually provide regulation authority to the CFTC over spot commodity markets, would provide actual guidance for discerning when an asset might morph from a commodity to a security, and sort of provide regulatory overhead so that exchanges like Coinbase would be able to offer securities and commodities all under one shop. And I think at some point that's going to have to be the solution one way or another. So right now it's going to be a race to kind of see what happens first. These SEC suits, which could take years to settle, or legislation, which could also take years to settle.
Thank you so much for joining me today, Steve.
Great. Thanks, Rosemary.